Hello and welcome everyone to the Commodity Report presented by myself, Phil Carr, at the Gold and Silver Club. So 2 words for you: natural gas. It is the strongest market out of all of the commodities that we are tracking today, and alongside that we've also seen, of course, the energy play over the last week has delivered massively. You've got heating oil, which is up 26% so far in the month of October. Today we've also seen Brent crude oil, WTI crude oil, they are broken out over 5% to the upside. And as we've continued to mention to you, this current volatility in the market is a trader's paradise to capitalize. Last week we banked a windfall amount of profit with our clients at the Gold and Silver Club. As you know, over 11,000 points profit that we had accumulated at the start of last week. So of course, for every 1 lot contract that you'll be trading, that's $100,000 of profit. Every 10 lot contract that you'll be trading, over $1 million of profit. All of that we detailed to you previously. Opportunities, massive opportunities in fact, to scale in at the swing lows for many commodities like gold, silver, platinum, copper, which all have taken off to the upside. Now we've also seen yet again another pullback after the CPI data on Thursday. So the CPI data came in stronger than expected, highest levels in 40 years. With that, the dollar had a knee-jerk reaction, broke back out to 20-year highs. Subsequently, we saw equity markets, they broke back below their swing lows, initially with a cascading sell-off to the downside alongside many commodities. However, within short succession, we then saw a capitulation back up, massive short covering, which actually ended the day there with many commodities like platinum putting on a positive return. So platinum managed to gain over 2% to the upside. We've also seen similar on copper, a 1.5% gain to the upside on Thursday. As you know, natural gas, crude oil, heating oil, all massive moves to the upside later on in the session on Thursday. This is essentially a news failure in the market. So this is where many market participants, they expect the markets to have a much larger correction, which was confirmed by obviously the CPI data. Expectation would be that the Federal Reserve will need to be more aggressive in rate hikes. But the fact is, that's not happening. You've had a massive rally to the upside later on in the session, a capitulation, and now many traders, they're getting caught with their pants down yet again on the wrong side of the move there. Either they're getting squeezed out of their longs, then stopped out, going for a sell short, or they're executing new sell shorts and a break of the swing low, a break of support, ultimately to see a strong reversal into the close as we are seeing at the moment, which comes back to my main point again here. I'll definitely keep an eye on natural gas right now. We've been consolidating for many days now at the 6.3 to 6.5 level, so definitely that is one to have on your radar. And as we discussed with you at the beginning of the week, we've got in so low here with many commodities over the last couple of weeks that our main job is really only to re-enter and build into positions at much lower prices, or to take profit as we continue to see breakouts to the upside here. So as a result of all of this volatility, choppy price action that we're seeing at the moment, we're not getting caught up in any of this. Our positions are so low that it puts us in a magnificent position here where our main job yet again is only really to take action if we get breakouts back towards the swing highs, taking more profit off the table. When we break down back towards the swing lows, we essentially reaccumulate and get in at much lower prices. And again, we've seen a nice pump to the upside into the close on the energies here. Everything from Brent to WTI crude oil to gasoline to heating oil, and especially natural gas. And again, this comes down to utilizing a professional, research-driven approach to the market. This is what 99% of the retail market, they are not trading. They are not trading this way. This is how the 1% are taught within the hedge funds, the banks, the institutions, how to use statistics, real-time market intelligence, and align that with the real-time data-driven cycles for the daily, the weekly, the monthly, and quarterly cycles for each commodity. Further compound that as well with the intermarket correlations, the ratios in the market, of course, the narratives, the macroeconomics, the geopolitics. Further align that with the key areas of liquidity alongside the capital flows in the market, the ratios, the intermarket correlations, then further compound that with how the hedge funds, money managers, banks, institutions, commercials and hedgers are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, ditch those outdated technical analysis and gimmicky technical analysis strategies, you just end up being chopped up all the time in these markets, will just end up being death by 1,000 cuts. We definitely don't want that for you. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.